Good afternoon, everyone. Sir, I hope I am audible now. Am I audible now? Good afternoon, everyone. A warm welcome to all the distinguished speakers and participants in today's webinar, which is based on assessment and audit under GST. Today's webinar is being organized by DGTS Delhi Zonal Unit and Kolkata Zonal Unit in association with Federation of Indian Chambers of Commerce and Industry. I am Vivek, Additional Director DGTS DZU, and I will be the moderator for today's session. At the onset of the webinar, I would like to invite Sri Amish Kumar Gupta sir, who is an Indian Revenue Service Officer of batch 2002 and is currently serving the department as the Additional Director General, DGTS, DZU and KZU. Sir has a dynamic personality and a vast experience of serving in various formations in Delhi NCR and Gujarat zone. Sir has also worked in board office and has worked in almost all areas of department, which are excise, customs, and goods and service tax. Sir, I kindly invite sir for welcome address.
Thank you, Vivek. As you all know that this time, our Kolkata Zonal Unit and Delhi Zonal Unit, in coordination with FICCI, we have organized this webinar. More than 5 years, have gone, and the GST has been introduced and is settled now. But still, we find that some basic concepts of GST. Sometimes, time to time, we keep on organizing webinars in on different topics, and during the year we've been doing that in partnership with different agencies. But we have found, and in interaction with the SECs and people, we generally find that a lot of provisions and the general fundamentals of GST are sometimes people are unaware about. And I think that since this is the end of the year, the time has come now that we need to refurbish our concepts and re-understand it and properly assimilate the concepts which are there. So the fundamental of GST obviously are covered under the assessment, and the logical corollary of that would be audit. So these are the two fundamentals on which the entire taxation system of GST stands. This time we have, in partnership with FICCI, we have taken this initiative. Mr. Sachin Menon is here. He's the chairman. GST task force in FICCI. We've always been kind to come forward and associate with us in such types of initiatives. Further, we have also the resource person is Shri B. Venkateshwaran, our assistant commissioner, retired assistant commissioner, who's a very knowledgeable person, and he is with our experience in last few webinars, we have learned that his webinars are well received, and people have praised that the details with which he comes forward. I myself gone through his presentation this time and find that nothing has been left in that this topic. Started from assessment to adjudication and the basic compliance verification issues like assessment, audit, search, scrutiny, all the forms, all the related returns, and the demands, and all the things which arise from assessment and audit are being handled in this. And the webinar is very detailed, and the presentation is very detailed, and I'd like that more and more people should take benefit out of it. So with this, thanks again, and I'll request Vivek to take it forward. Thank you.
Thank you, sir, for such encouraging words. I am happy to share that today we have with us Sri Sachin Menon, Chairman GST Task Force FICCI. Firstly, I would like to introduce Sri Sachin Menon, Chairman GST Task Force FICCI. He has wide experience in working with various renowned companies and has vast experience in the matters of taxation and indirect tax policy. He has also been associated with various advisory committees on matters related to indirect taxation. Sri Sachin has 4 decades of experience in handling indirect taxes, which include 16 years with various MNCs, local corporate in management roles, and 23 years with global consulting measures. His area of functional expertise include GST, VAT, customs, service tax, central and state value-added tax laws, etc. Now I would invite Sri Sachin Menon for sharing with us his views on today's topic. Sri Sachin Menon.
Thank you for the introduction. Honorable Adjutant Director General DGTS Sri Amish Kumar Gupta, Honorable Additional Director General Vivek, who is the moderator, Honorable Speaker Sri Venkateswaran, ladies and gentlemen. It's an honor for FICCI to associate with the DGTS in a very important webinar like the one today we hosting on assessment and audit under GST. While on behalf of FICCI and its members, I thank DGTS for giving an opportunity to associate with you. I would also like to mention some of the issues arising out of the experience of taxpayers thus far. Because all you know that the assessments are in progress in all the states now. I hope the sharing of this experience would enrich the discussion and the presentation in the ensuing part of this webinar. So let me just mention a few of those issues faced by the taxpayers and currently. As you know, 2017, 18, 18, 19, 19, 20, these 3 years assessments have come up now. And there is a very challenging deadline for issuing the orders, which is 31st December for 17, 18. 18, 19, it is 31st March 24. And 19, 20, I think it is 30th June 24. So it is a challenge both for the taxpayers as well as the officers to complete the assessment on time. Now the pressure is building up on both the parties to this assessment. And as a result, what is happening now is that the audit reports having demands or any kind of objection or explanation, though the submissions or reconciliation or explanations are made in writing, many cases this is not considered while issuing the audit report or the assessment order. So this is one thing which I am not blaming the department completely for that matter, owing to the rigorous deadlines. But the point is that this can create a lot of pendency in litigation because people will go on appeal and things like that. Maybe that's one area where maybe department may deliberate what best can be done. The second thing is that these audits are happening across all the states. So the officers of those taxpayers are busy with preparing and submitting, attending the assessments across the states simultaneously. At the same time, now what is happening is that the specific information are asked by issuing summons to the assessees. And where many cases the summons is on a particular subject. When the subject is explained and satisfied, then the inquiry and demand of getting information or documentation beyond the subject of assessment summons is also become a order of the day. Similarly, at the same time, parallelly, there are DGTI audit, GST audit, CAG, DGTI, DGA audit investigation is also in progress. Maybe for the same assessment year where the assessment is under progress. So maybe there could be some kind of planning the timing for such investigation so that the assessees can respond to those audit queries or any investigation requirement once the assessment deadline is over. Because all this putting together is putting a lot of pressure on both the officers as well as on the assessees. And these multiple authorities investigating the same matter, it is also becoming the state and central officers simultaneously having the same subject matter is another concern which the people are facing right now. The another issue is that many cases the state level P&L account or trial balance is asked by the officers, which is not a requirement as per the law. And many cases the companies having the accounting on a national basis when they are operating more than one state. It is becoming very difficult for satisfying this requirement. Those companies having the ERPs like SAP, they are trying to comply with this requirement, but those who are having Oracle or other packages are not in a position to bifurcate and produce this before the authorities. This is one of the very challenging situation as of now. Then there are daily basis. There are cases where there are excess ITC appearing in 2A for various reasons, valid reasons, but that is being used to demand to say that you are suppressing your turnover, and demands are issued on that basis without any further investigation or the reasons which is attributed or explained or submitted is being ignored. And similarly, in the case of the gross profit ratio turnover from tax audit report, income tax audit report, let's say, for example, the GPs as per the tax audit report is 20%. Then that gross profit ratio is applied to the purchase and determine that what should have been the turnover. If 20% is the gross profit, and accordingly the demands are issued, or turnover is increased. So this is another issue which you are seeing there. And then cases where credit notes are issued, the officers insisting that you should have a confirmation obtained from the recipient of credit note that they have reversed the input credit. And then levy of exempt income. There are other incomes which are, for example, exempt income, or income from security trading, etc., which is exempt. That is added to the taxable turnover, and then demands are issued. And even the RC cancelled the dealers, even though the RC was valid at the time when the assessment, the invoice was issued, is also being reversed. Similarly, there are certain clarification issued by the department, like IST versus cross charge, where the department clarified that even if you do the cross charge instead of ISD, that is acceptable. But the officers are raising demands and disallowing those kind of allowances. And cross charge about employees' cost is also clarified to be not to be included in the cross charge. But there are demands raised on that also. And similarly, the liquidated damages, which is clarified by the CBIC, that it is not a consideration for service, is ignored and notice are issued. So these are some of those points which I have mentioned. Now, perhaps maybe the audit manual, which is issued by the CBIC, could be socialized to have a uniform approach, maybe across India, for the assessment, so that both the auditor and the auditee both are in a comfortable situation as far as the things are concerned. I hope the experience shared by me could help us and the officer of GST to consider formulate some uniform policies for assessment proceedings and procedures across the country. Would be very much helpful. I once again thank the DGTS for giving us an opportunity and give you an opportunity to associate with the DGTS, and looking forward to many more such kind of webinars. And this is a very timely webinar. The subject is very timely because every people have some of the other problems. So maybe I think in the ensuing discussion, we'll have some of the answers, if not all. Thank you so much.
Thank you, Sri Sachin Menonji, for your opinion, views, and sharing hands-on experience. Now for presentation, I would like to introduce Sri Venkateswaran, who brings with him 35 years of service experience in Central Revenue Department, while holding various positions at various places and retired as Assistant Commissioner, Group A Officer, of Indian Revenue Services in January 2018. Welcome, Sri Venkateswaran.
Good evening, sirs. Hello.
Venkateswaran, you are audible. Share your.
Yes, sir. Yes, sir, I'm audible. Hello.
You are audible, Venkateswaran ji.
Yes, I'm audible. Shall I start? Otherwise, I'll wait for you, sir.
No. You start your presentation. You have to share your presentation. That is not shared.
Thank you very much, sir. Thank you. Thank you very much, sir. I'm sharing my this thing. Then I'll start my session. One second. Hope everybody sees my presentation first page.
Yes.
Thank you very much, sir. Let me start this session for the DGTPS Delhi zone and the Kolkata zone. So very warm welcome and thank you for giving me one more opportunity to share my experience and conduct a session for the DGTPS Delhi and Kolkata zone. So my respect for the ADG DGPS Delhi and Additional Commissioner DTPS Delhi and also Chairman Fiki for kind enough for inaugurating the session. And I also thank for all the participants today joining this meeting webinar to understand what is assessment and audit under GST regime. Definitely, sir, it is a really, I have taken nearly pains to provide almost all the information which is required to understand what is assessment, how the department is going to verify the assessment done by the individual assessees, and how it can be culminated into audit or investigation as the case may be. So here we wanted to know what is assessment, how the department is going to verify the assessment, how we are going to handle it, what is the culmination, how we can see that once you get into assessment, you can also, if it is correctly done, you will be also happily go about that. So that was, you can also, it is a peacefully, you can also this, the department does not expect you to go behind all these things. If you understand the legal provisions well, and what are the complaints required as per the GST Act and rules made thereunder, then 90% of the issues are definitely solved. Our respected member, this party chairman Fiki also told something about the credit notes, other income, gross profit, RC cancelled dealers, and also about liquidated damages, then gross charging of the IGST. Yes, all these things are required as a compliance required by the GST Act and rules made thereunder and also by native notification. So definitely department want to verify whether these exemption availed by the various assessees is in tune with the legal provisions. So that's why the department also expects to verify each and everything. And CBIC also issues periodically necessary clarification required for the uniformity of the assessment. Almost we do not know whether which party is affected on account of the certain compliances. So once this compliance is also understood by generally, the department takes steps into that, and with the concurrence of the that is your GST Council, and as per the discussion held with them, then after that they periodically issuing clarification under section 168 for the uniformity. So definitely the department is listening to the requirement of the trade and industry. So with this introduction, let me go for the today's session. So as I said, DTPS is always doing a wonderful job with reference to the tax education. So here this education purpose is by and large to understand the provisions of law very simple manner. Definitely it is not, we do not want to complicate with you so many complex rules and regulations or these things. We wanted to educate by and large those who are in the field, who are handling at the front end this compliance mechanism very simple manner. So we do not want to unnecessarily dwell upon the intricacies of each and everything. One. Second, we want to say this is some of the things we are mentioning as a act. There are 3 acts are available. One is called your GST, then state and legislative. So for all practical purpose, I have taken only GST Act only. So that is the only reason I wanted to say. Otherwise, For all legal provisions, we request the participant to kindly go through the legal provisions contained in the Act and Rules notification and issued by the, that is circulars issued by the CBIC periodically. That will definitely enlighten you to understand the legal provisions, to comply the provisions without any hesitation. So today's topic, we are going to cover a little bit about the statutory provisions. Then what is the self-assessment by the taxpayers? What is expected out of taxpayer on account of self-assessment? Then how the department is going to verify the assessment done by the taxpayer is correct or not. There are mechanisms available. We are having at present 3 mechanisms are available at the hands of the department. One is nothing but your scrutiny of return. That is done at the range level or field level, and circle level in the case of GST, that is central state governments. And second level, we can call it as an audit. It is a detailed verification of the financial accounts so that they can also understand whether the compliance done by the taxpayer is correct or not. So if these two things are agency is not required, we are having one more agency called our anti-evasion. We are having a local anti-evasion with the commissionerate level, and we are having a specialized anti-evasion for the GST intelligence. So these people are also want to verify the compliance mechanism, but they are coming into the different. But as far as these two people are concerned, that is your assessment by the scrutiny by the field officers and the audit by the field officer. Here they will be intimating you what they are going to expect it from you and to verify their compliance level, whether it is correct or not, whether there is a escape of revenue, whether there is a non-compliance is noticed, so that they can also check whether there is a revenue loss, or otherwise they can also say yes, the compliance is correct, and other complaints which is required also we can indicate. So there is a detailed procedure for each and every work of by the department. That is a scrutiny. We have a very detailed SOP, and with reference to audit, we are having a very detailed manual called audit manual, which consisting of, we can say it is started from year 2000, a systematic audit. It is starting from nearly 10 steps. I will explain each steps in the screens to come. And finally, I will take some question and answer, because definitely we cannot answer many of the questions. Here it is assessment is a legal domain, and it's a quasi-judicial and a judicial forum. So some of the clarification at the field level, what is your day-to-day level expected, we can also answer to that. So assessment or adjudication, what are the steps involved? Definitely, every work requires an assessment, whether I have done my work correct or not. This is nothing but really an appraisal. It is a self-appraisal or by the appraisal by somebody, whether you are understood the work or your work is satisfactory to the level of the legally expected, or you can say organization expected level, we can say. So this is self-assessment. So I self-assess myself and inform to somebody. It may be in the case of the taxation, you are going to intimate to the tax authorities. I have assessed myself, sir. Please kindly verify whether I am self-assessment is correct or not. That is called self. I do first my assessment, then I would intimate whether my assessment is done is correct or not. I report that assessment to the competent authorities or we legally required. Then the particular person or the proper officer verifies whether the compliance is correctly done or not. But as I said earlier, we are having a 3 mechanism, 3 official level is there, 3 divisions which has a distinct function. One is called the scrutiny, and next is called your audit wing. Then we are having a anti-evasion wing. Once these officials or these organizations verify the compliance mechanism, they will take some action which is required, whether rectification or recovery or these things required. So that is called, you can say, as a action taken by the department. So this action taken is communicated to the taxpayer. Sir, we have verified your assessment. We find this discrepancy or these are the areas there is a concern. There some gray area is required for your attention. Either you may be paying the debt or you may be not paying that. So we are intimating this is the assessment done by our department. It is in variance with you. Whether you agree or not, you please kindly take action, necessary action. Then after that, what happens? Based on the reply, whether it may be closed or further adjudication is required. Whether if you want to move into the legal, there is a judicial forum, the legal forum, there are umpteen numbers. So once your action is taken, you will be given a notice and a personal hearing. After that, the order is issued. That is called your first, otherwise you can say adjudicating level. Then you are having an appeal mechanism called the first appellate authority. Then after that, you are having a tribunal. If there is a question of law involved, you can directly approach High Court and Supreme Court as the case may be. This is the scenario for the assessment of the adjudication. So your self-assessment is scrutinized by the department. and they issue a corrective mechanism. This is there is a fault or correctness is there, then that will intimate it. Then the course will be commenced from the after the initiation, and depends upon the action will be by the taxpayers reply submitted for the action initiated. So some of the legal provisions, I want to say, I do not want to dwell upon so many legal provisions. Absolutely, each and every provisions. If you go through that GST Act, it is divided into, we can say, what is the compliance required by the taxpayer, and what is the action has to be initiated by the taxpayer on the violations, and also there it also says about the other mechanism available for you to for this thing. You can say there are something, these are the rules. It is broadly divided. So with reference to assessee also, we are having certain sections, certain provisions of definitions very much required. But as I said, that will be lengthy when I go for each and everything. So I restrict myself only to the needs of the today's session only. The first section is 211, that is section 211 of GST Act defines what is assessment. Assessments means nothing but you can understand determination of tax liability under this GST Act. It includes assessment by the self-assessment, reassessment, provisional assessment, summary assessment, and best object adjust assessment. So depending upon situation, it will be vary whether which assessment is going to depend. You can very well say the assessment, self-assessment is taken by the taxpayer, and all other assessments are done by the departmental officer based on the documents or provided by the taxpayers. So next, what is the definition of the audit? So assessment, we can say that is the only thing they have given. In audit means examination of records and returns and other documents furnished by the registered payer, and this is a very, very detailed manner. They wanted to verify the each and every aspect of the legal provision, whether it is a compliant with or not. So there it is a very much required. So this is the another thing section we can say, that is a section 13 of the audit. It says about the definition of the audit. So they will verify that the correctness of the turnover declared, taxes paid, refund claim, input tax credit availed, and to assess the compliance level with various. There are provisions are there for if you want to clear the goods, movement of goods comes under your e-way bill mechanisms. And there is one provision called if your turnover is more than 5 crores, now we are expected to give the e-invoices. So all these compliance requirement as per the law is verified by the auditor in very detailed manner, and they will be put accordingly the what is available, what is not available, what is a compliance and what is a non-compliance. They will be here. This is statutory provisions regarding the assessment. So GST assessment is a self 59 section 59 says about the self-assessment that is done by the your self-assessee, that is a taxpayer. Other assessment, provisional assessment, I am not touching because we are not having a very many mechanism for very many detailed provisional assessment, very meager. Earlier there was done in the centralized size, and other side we will having a regular provisional assessment. Here it is a provisional assessment is restricted very, very minimum level, and here also time frame everything is given. So I am not touching about the provisional assessment. Then 61, scrutiny of returns. Now that is a major work done by our range field officers. So that's why I'm going to take the scrutiny by and large. The today's session I will be concentrating more on the scrutiny of returns. And we are having a rules also for the scrutiny of returns. We are having a rule number 100, which says what is the prescribed being the procedures required for the scrutiny of the returns, how it has to be communicated, how it has to be selected, how the discrepancies has to be communicated, what are the forms has to be used for the communication. All these things are specified or it is elaborately discussed in the scrutiny returns rule number, you can say 99 and 100. Then some of the forms relating to assessment is given also. Here for the scrutiny of these things, we are having a assessment notice 10. Then GST assessment notice number 11. 11 is meant for your reply to this question, reply to the ASMT 10. Then we can say non-filers we are having a separate, and also unregistered we are having a different set. Then finally we are having assessment orders is issued under 16. All these things are, it is given for these things. So these are the certain forms. These are summary. We can understand these are the summary, or we can say it is a data capture for the immediate reference for this, but it does not mean it is completely order. So order will be as per the provisions of 68, 61 or these things. Here it comes as a what it has been done in the practical or procedural manner. For the online benefit, they have given the very many forms. In fact, we can say State governments are already implemented ASMT 10, that is DRC, everything. And Central has recently May 2023 has also come to the conclusion, has also implemented all assessment related work online from now onwards. So these are the forms relating to assessment is required. Then audit also we are having some certain statutory provisions, section 65, audit by tax authorities, and special audit under 66 we are conducting. There where is a necessity arises whether you want to say the normal audit cannot complete or understand the intricacies of the compliance level by the taxpayer because it involves some more expertise is required, where we are using the sections 66 to conduct a special audit by using CMA or chartered accountants. Then rules for this audit is 101 and 102 for this special audit. And AD201 is intimation conducting, and AD2 is audit report. Then AD2 is a communication when there is a special audit is required, and the information of the findings for the special audit is AD204. At present, for this today's session, we are going to handle section 66 read with section rule 101 and forms AD201 and AD202 only. Then other statutory provisions relating to these things. Once the assessment starts, non-compliance also notice. If they are non-compliant, there is a definitely requirement of your recovery. So that recovery proceedings comes under either section 73, which is called nothing but your non-suppression cases. We can say 73, and where there is a suppression evasion is noticed, then comes under the section 74. So it may be culminate and the issue of so-called notice under section 73, or it is also possible under section 74, where that also we are given a elaborate rules. We are having a rules 100 and 142. The 142 says how the notice has to be issued. DRC 1A, which is called the pre-consultative notice in certain cases, and also we are going to issue DRC 1 for the so-called notice. It is a commencement of your judicial, that is a quasi-judicial process. Then that will go on some other these things. We are having the forms for that also. That forms also we can see the DRG1 summary of so-called notice. And 1A intimation ascertained being this thing. Here it is nothing but we can call it is a pre-consultative notice wherever required. Earlier it had a it shall be issued. Now after some time it may be this 1A may be issued depending upon the veracity as requirement by the department. Whether it may be issued or may not be issued, that is possible. So that the 1A is not now at present, it is a mandatory after the amendment of section, the rules they are under. So here then summary of the statement, that is for the wherever there is a subsequent period you want to issue a so-called notice, which is already issued at the DRC 1. Then you can go for summary under DRC 02. Then intimation for the payment. Okay, I agree with the findings of the department, either it is a scrutiny or audit or anti-evasion. I wish to pay that amount. You can pay it using DRC 03. Any amount other than return related. The one document which you want you use for the payment towards your liability, either on your own ascertaination or by the ascertained by the department by the agencies like audit or your anti-evasion or your local scrutiny. These things you can say DRC 03 is a document. You need not wait for the return. You will pay at the amount at any point of time DRC 03. And DRC 04 issued once the officer verifies your submission DRC 3 is correct, yes, it is acceptable. If you want to close this issue, there is no need to go for anything. They can issue a DRC 4 acknowledgement of the acceptance for the payment made voluntarily. Then DRC 5 is a conclusion of the so-called, that is a conclusion of proceedings where there is no necessity for issue so-called notices. Then if I am going to contest the issue, then I have to issue reply on DRG 06, and DRG 07 is the summary of order. That is my final judicial first appellate. There is adjudicating authority has issued or concluded the proceedings initiated under DRG 1. So this is our forms required for each and everything. Then the next question is, we are starting our session, which is truly required for the taxpayer to understand. The taxpayer, we said, he is asking so many things, sir, I have to require very many compliances required. Absolutely, yes, each and every taxation law is differs based on the taxable event. So earlier it is a central axis, we are having a manufacture, then we are having a sales, then we are having a customs and income. Each and everything has a different set of taxation policy, which means you can charging sections or even taxation events. So here your goods and services, it is definitely, it is a one tax, one nation. It is, we are having a comprehensive for the entire length and breadth. So definitely the compliance level is slightly complex. Definitely we have to understand because we have to handle the entire country under a one umbrella. So definitely it takes some special attention. So when you are doing self-assessment for the early era is different, now the GST era is entirely different. So let us understand what is my self-assessment is requirements. So what are my self-assessment? So here it is also we said it is as earlier, but like our central excise and service tax, the self-assessment is also motivated in this thing, which means you are going to assess, you are going to find out what is our liability. Then you intimate to the department, this is my liability, I have pointed out this is. Then the department can verify. So it does not say earlier we are having a assessment by the department. So the department will submit the data, the assessment will department will assess, then ask you to pay this payment. That is called earlier. It is not a production-based assessment we got the earlier also physical controls. Now after 1996 in central excise, we are completely self-assessment, and VAT regime afterwards they embraced, and service tax. Also, we have gone for the self-assessment from 1994 onwards, once the service tax is issued. Now in this GST scenario, from the day one, it is a self-assessment. That's all. The assessment means ensure the compliance with the taxation law by regulation. For me and for the taxpayer and the tax collector or tax implementer, the law is same. So he has to interpret for his law. Then you have to say this is my interpretation is correct. So definitely there is a point of disagreement. For that we are having a quasi-judicial as well as the judicial authorities are there to decide which interpretation is correct. Otherwise, by and large, we can assess our tax liability very simply. Until otherwise, there is a complexity involved in the transactions. So tax liability in GST. So first I would understand what is the tax liability. So my tax liability applies, this is supply of goods or services. Okay. So here, unlike your centralized, it's a manufacturer or in the sales tax, it's a VAT. Here a supply, mere supply on consideration for the business. That is, we can say definitions available. I am not going for all definitions because there is a very lengthy process. I am going to use very simple here only. Here it is a supply attracts goods and service taxes. That's all. Then it is a destination based because we know very well GST is a destination based. So the tax which is consuming has to pay the tax. That's why we are having three types of taxes. One, we are having a central GST, and we are having a state and UT GST, and we are having a IGST, which is for the cross border. That's within India, interstate and intrastate. If it's intrastate, then we have to say it is a consumed and service, that is goods are emanated there and consumed there itself. No sir, the goods are from here supplied to some other part. Then comes your intrastate, that is interstate transactions where it comes IGST. That's why we can, it is a destination has to be decided whether Tamil Nadu is consuming or Andhra is consuming the tax burden. The tax levy will be accrued to the tax and the union territory where the consumption takes place, and all goods except we are having a certain goods, that is alcoholic and human consumption, and 5 petroleum products are at present outside the purview of GST. So all these informations are very much required to understand your levy. Self-assessment, I already told you assess your assessment, that is your tax liability based on the legal provisions available at a GST Act and rules made under the notification issue. Then once you assess, what is the next step? You have to intimate, this is my assessment to the department. So you are not going to keep mum said I self-assessed. If you are not filing return, then definitely you are not complying with the provisions of law. You assess, you are keeping mum means then you are liable to be take action by the anti-evasion rather than your scrutiny by the field office or by the audit. So first and foremost thing, I have to self-assess. Secondary work starts furnishing of returns. So the department said you have to furnish the returns. Now we are having two types of returns. One is for your outward supply. That means what is my liability you are going to intimate in GSTR 1. And then the department is providing you some information. We can say it's a facilitation. Earlier it was mandatory. Now it is also made mandatory after 2B GSTR 2B. Based on the outward supply, then the department indicate you these are your eligibility for the ITC credits, input tax credit. Because in GST, each and every tax liability is borne by you is returned to as a tax credit subsequently. So your all tax credit comes through your GSTR 2E or 2B. Then you have the tax liability. So you have said my tax liability is this much, sir, and my accrual of ITC credit is this much, sir. My final liability I am going to pay this much. either in cash or in credit. That is your furnishing of information and all other information. So what is the primary info? Here it is a document is required for the self-assessment. It is nothing but your self-assessment starts from issuing the invoices and consolidating these informations in the GSTR1. In GSTR1, we are having a granular data with reference to tax invoices B2B, and other than B2B, we are having a summary invoice only for B2C. In export, we are giving a B2B, that is a invoice level, and a supply to SEZ invoice level, except in the case of B2C, all other things are happening at the granular invoice level assessments. And GSTR1, then next calls your GSTR3B. The audience may be aware, there are so many things that happened, the GSTR1, GSTR1A, and the GSTR3, GSTR2A, all these things happened earlier when the department, with the government implemented GST to way back. And after that, so bring the simplicity in the legal, complying the provision, they reduced the sum of these things and they came, it is only GSTR1, that is for the taxpayer, that's a regular taxpayer, I am saying. And that is then GSTR3B for your liability. And another two returns we are having is nothing but with reference to taxpayers is your GSTR9, that is annual return. You wanted to set right some of the information which has not been revealed in your earlier GSTR1, GSTR3B, that you can reveal there on the GSTR9. And also you can reconcile by certification. Yes, I reconciled my financial accounts with your GSTR return. So everything found in order. Earlier it was certified by the independent auditors. Now after last couple of years, we are starting with the certification also done by the taxpayers. So in self-assessment, we have to understand the most important is this thing after assessing furnishing of the return. So factors which are determining the tax liability. So then comes, now I have to comply with the provisions. So what is that assessment told? Whether my tax liability is correct or not. So in order to understand my tax liability, I have certain parameters. What are the parameters? First, I have to understand whether my supply comes under the GST or not. So for that, we are having a section 7 read with your 3 schedules. So schedule number 1, schedule number 2, schedule number 3. Schedule number 1 says, even if there is a no consideration, this particular supply is considered as a supply of goods or service. And second, we had a doubt whether this particular supply is supply of goods or services. So don't worry, sir, we will be clarify that is given in schedule number 3. In schedule number 2, schedule number 3, we say these are the supplies which may not fall under the category of your supply as per the GST Act. So these are the 3 schedules. You have to understand supply, and supply is defined in section 4, section 7, and also we have to read it with other schedule 1 and 2. Once I understand my supply is taxable under GST. Okay, it is a taxable liability, which means my taxable event has started. So taxable event has started, then I have determined what is the quantum of my tax. That is the secondary portion. In second portion, we will have the first and foremost thing, whether I have to pay tax or not, I have to find out the classification. Because the classification only says whether this is the goods, this attracts 8%. The rate is determined based on the classification. So what is the rate? Whether there is a rate for my tax or there is a no tax for my supply, which is called as separate service. So here, in order to understand that, we are having a classification of, okay, sir, you classified my services, you understand it is a attracts tax at some 5%. Okay, you say 5%, that is called advaram. In that scenario, what happened? What should be the value for my tax payment? That is called your next parameter value. The next parameter is nothing but your time of supply. Okay, sir, I have to pay the tax. When should I pay the tax? So there we are having a legal provisions called a time of supply. The next, okay, sir, supply. So we said in the earlier scenario, in the earlier slides, the GST is a destination based. So which state has to, the tax has to go. So that we have to understand place of supply. So we are having a place of supply is governed as per the provisions of IGST Act. In IGST Act, we are having a, when the supply is made within the state, or for goods separately, services separately within India and outside India, to and fro. That means export, import, and domestic consumption. All these things are clearly mentioned under section 10, 11, 12, 13. So these are the 4 sections which say place of supply. Because sometimes back our learned this thing, FICI chairman told, sir, you are asking payment under gross charge mechanism or IGST, CGST? Yes, definitely. That is required as per the provision of place of supply, because one tax, that is a state may receive a lesser tax on account of an incorrect determination of place supply. So there is a mechanism is very much required. That's why we are verifying whether this mechanism is correct. But procedure, this is actually a tax liability. If you need modification, we have to sit with the GST council, we have to modify. Otherwise, as of now, this tax liability based on the place of supply is vital. So if all these parameters are determined, then you are determined your tax liability. So my supply, I am a consultant, sir. Fine. It is a service. It comes under chapter 99. That is that 99. Then value of supply is, it says mine is a 5% tax. Then they say value of supply is these are the values include, these are the values exclude. Yes, sir. When I have to pay? You have to pay either at the time of provision or within 30 days from your issue invoices. So from the date of invoices, or if it is date of invoice is not known, date of supply. Whichever is earlier, there my liability starts. Okay, sir. Then what? Sir, I have done my services only within Tamil Nadu, sir. I am also placed in Tamil Nadu. Then my service receipt is also in Tamil Nadu. Then in that scenario, what happened? My place of supply is Tamil Nadu. No, sir, I am providing the service to neighboring state. Then my place of supply is other state. So here I will assess my tax. I will say I am now liable to pay 100 rupees towards GST, 100 rupees towards SGST, or I have to say I am liable to pay 200 rupees as my liability. So this is how I am determining my tax liability within the parameters. First I have to understand supply, then classification, then value, then time, then place of supply, and this is my tax liability I have determined. So supply, I told it is defined. We have also for the readers, that is subsequent to PowerPoint, you will be want to read. That's why I incorporated the supply definition, or which is the which area you have to look into that. We have enabled you. We say please after the session you can go to this and you can enlighten your you can increase your knowledge on account of the taxation. So that's information I given. I have explained what is supply. Then type of supply, I told there are 3 types of supply in GST. One is called a taxable supply. That is based on, normally we can call it as a B2B, B2C, B2G. Government, then C2B, common man to business. Then it is also G2, common, that is a government to C, and also zero rated supply, which is called export of goods and services, and supply to SGZ. These are the considered as a taxable supply. Non-taxable supply also may happen to the same persons, but here it is is exempted from the GST, or we can say it is a nil rated. So non-GST supply is which does not comes under the category of your GST. Then with the transaction not covered under GST, we can say that it comes under Schedule 3. And also we told alcohol liquor does not come under the GST. And at present petroleum products are not coming under the GST purview. So these are the type of supply you have to understand. Then classification. The classification is categorization of goods and services to ascertain, I told, what is the rate of tax or exemption. So it is a complex procedure, but thankfully we are having a different type. We are having a legal provisions, we are having a schedules, we are having the annexes. Here, with reference to goods, definitely we do not have a no schedule which is required for the GST scenario, because GST scenario by and large it is going to international trade and also common for every state and center. So what we told is we are embraced the Customs Act. The Customs Act is our classification. So here definition has been given, and the Customs Act, Tariff Act, we are embracing for the purpose of classification of the goods. And service is defined. What is a service? That is also as per section, and which refer to classification. I told we are embracing how to classify. We are using the Customs Centralized Act. We are having a Customs Act, and the tariff item, subheading, heading, chapter heading, everything is taken care of from the Customs side. The rules of interpretation used for the Customs Act will be also used for the GST also. In the case of services, we are having a specific annexures which is available in the notification 11 of 2017. The 11 of 2017 we have appended as annexer. This annexer gives you what is the SAC code number or HSN code number for the services. So that is required for our purpose for classifying. 9954, nothing but your construction services. And we are having nearly 99, so it is 99 starts and it goes on to the some other, all services under this category can be used. And they are also given explanatory notes also annexed that gives more information how these services can be fit in this particular category. There also it is available. That is called your explanatory notes available. Explanatory. If anybody want to go through or enhance their knowledge on taxation, please download notification number 11 of 2017 annexer, and along with in the CBIC portal available is a explanatory notes for the services, classification of services. Now, once you understand this, now the next question I told we have to find whether I am taxable or not. So I said there are exemptions also available. Either it is a based on condition or there is a shifting or a rack liability. So that I have not told, that is RCM liability. Instead of supplier paying the tax, the recipient is expected to pay taxes in certain cases as per the provisions of section 9.4 or 9.3. The section 9 is a charging session for the forward mechanism, and earlier we had also done a session for the DGTS for the RCM liability on account of the unregistered section 93, section 94. So for the purpose of your assessment, your forward mechanism means you are going to find out your rate of goods by notification number 1 of 2017 CTR dated 28/6/2017. It is being amended whenever there is a requirement. Wherever there is a requirement, now you know very well 52nd council has already finished. So all these council meetings, they recommended to rationalize certain rates. So we will be having a umpteen numbers of amendment with reference to 1 of 2017. But basically, if you want to find out where it comes, you have to find the rate that 0.1 2017. It consisting of schedules also. Schedule for the 1, 2, 3, 4, that is 3%, 5%, 12%, then 18%. So there are having a schedule. For reverse charge and goods, we are having a 4 of 2017. And one particular type of clearances, we are having a merchant exporters, where the rate of it is 0.1% irrespective of the other rates. So there you are going to use the notification number 40 of 2017 CTR dated 10th. An important notification for service. Sir, I want to assess my service tax liability. Yes, there are 3 notifications which you have to be definitely understand. It is called 11 of 2017, which rate of tax. Exemption we are having a 12 of 2017, 13 of 2017 for the reverse charge mechanism. By and large, these 7 notifications are sufficient for most of the assessors, most of the taxpayers. This is going to be the governing rates. So this will be the very much important. So once you find value of supply, that comes under section 15.1, 15.2 and 15.3, 15.4, 15.5. So these are the value of supply. This thing you have to read in conjunction with rule. We are having a 27 to 35. When there is a consideration is not able to understand in money terms. So consideration other than money, how I have to assess, or if the sale is between the related parties, how I have to assess. So these things are the value rules are available in chapter 4 of GST rules 2017 by the rule number 27 to 35. By and large, in the GST, the transaction value, that means your independent value between the 2 buyer and seller agreed upon, that value is considered as a value for the purpose. And inclusion and exclusion we are having, these are the elements we have to include, these are the elements we have to exclude. Then this is a non-inclusion of discounts in value. So there are certain things. So this only the question of debate by our honorable speaker Fiki. He told us, sir, you are asking for the evidence for the credit notes, whether they are reversed or not. So because there is a provision called the 15.3 which expects non-inclusion of discount in the value of supply. So the non-inclusion 53 says your discount is allowed. There are provided it will reduce a liability. When you reduce a liability, your earlier invoice is subsequently reduced. If it is upfront, no problem at all. If it is subsequently reduced, because discount is allowed at that time of the post sales also, post supply also, there is a possibility of discounts. Because the industry expects the practice is different. You are giving the cash discount that depends upon the post sale, and you give quantity discount that is after. Then year end sales, there will be the business consideration is required for that. So, however, first instance you have passed a huge number of ITC. So they want to know whether this ITC, then you are claiming rebate or reduction on account of the taxes as per the provision of 15.3. So there is one provision which says if there is a value is reduced, you will issue credit note. please also verify whether the other person has reduced that amount. Otherwise, it is a loss of revenue to the department. So there they wanted to ensure this 15(3) is very much required. That is the reason. Otherwise, we can say now there are people are asking definitely. You wanted to cross verify the credit notes. Now you know very well there are two types of credit notes now available in the market. One is called your normal credit note on which GST is indicated. Another is called your commercial credit note that you know very well there is circular has been issued that does not suffer any GST component that will be issued beyond the outside the scope of your GST that term commercial. So there is a distinction has to be made and the department also expected to know whether it is a commercial credit note or it is other than commercial credit note. So there is a requirement of that. That's why the department is also verifying that aspect. Let me take some water, sir. Then comes place of supply. I told it depends upon the interstate, intrastate, or it is a India or outside India, or we coming to India or going outside India. So here we are, that is called your place of supply. So we are having this is the place of supply as told IGST Act. Within India, section 10 for services, outside India, section 11, services we are having a section 12, and outside India, 13. So here, it depends upon the property. If it is depending upon the different type of services. Suppose a service is, say, consultancy service, it can be a cross border. But if it is a construction services, it's a who is the beneficiary. So where the immovable property is available, that is the place of services. So that definition, it refers to movable property, movement of goods, there is a transportation of goods, transportation of passengers, telecommunications, and intermediary, and we can say training and events which is called conducted, and advertisements which are given. These are some of the sections. There is a different treatment of place of supply. So that you can see where within section 12 you can see whether your services, if you falls under section 12, whether inclusion clause or exclusion clause, that you have to understand for the payment of. Definitely it is a auditable, objectionable point by the department. That is a verifiable fact by the department, whether you are assessed taxes based on section 12. So we cannot say department cannot verify. So you are expected definitely department will verify whether 12 or you are used other than 12. In goods also there are issues. There we say goods will be definitely we will say, but if the goods, if I am having the head office in Delhi, but my factory is in the Tamil Nadu and supplier is also in Tamil Nadu, but my order will be placed from the Delhi office. But here how the determination, Delhi office only a intermediary issuing orders only, but goods are moved from Tamil Nadu to Tamil Nadu. In this scenario, what is the liability? It is an intrastate only. It is not an interstate, even though the order has been issued from the head office and located other outside Tamil Nadu. So that is your place of supply. That's also a important requirement for the purpose of your interpretation of or compliance also. Then we said intrastate supply, IGST, your intrastate supply, CGST or UTGST. If it is a SEZ, we call it as a IGST supply. And import or export, we are called as a IGST. So tax type for the depending upon the place of supply, we are having CGST and SGST when it is an intrastate supply only. In other cases of interstate supply, export and other supply to SEZ, we are IGST. Unfortunately, sometimes back what we found, EOU was earlier people are considered as a export. Unfortunately, they paid CGST instead of CGST, they paid IGST. But afterwards, the department don't know the 100% EOUs also comes under the normal domestic supply, but only SGST comes under the other than purview. So SGST is issued in Tamil Nadu and supply is also in Tamil Nadu. Your liability is not ST, SGST. This we have to understand while discharging your tax liabilities. Then documents required for determination. Invoices, credit note, debit notes. Invoices normally issued for the taxable goods, and bill of supply is issued for the exempted goods, and the credit notes to reduce the tax liability, and debit note to increase the tax liability. So all these things are by and large involved in determination of your tax liability. Then vouchers for advances, because in the case of services you are liable to pay tax on the what you call your advances received also. Then revised invoices, there may be occasion, you may not be immediately getting your registration. There is a time lag of 30 days is available. In between, you do not want to keep them, you want to sell your goods. You can sell goods, then subsequently you can revise your invoices. After getting your registration, that is comes your revised invoices. Vouchers for RCM, by and large, now we are not having a voucher because earlier we have to upload that voucher also. Now that is not done away, but you have to provide the information, what is the data required for the RCM liability you determine. And with reference to IT 7, you can call as inward supply. There you want to invert invoices, which will be show you what is the tax liability, and also sometimes reduces the tax liability, this input tax credit on account of the credit note issued, and also there is a possibility you will get also increase your tax liability that you can based on debit note you can get more output credit. That is possible. So that's why these documents are required. For tax paid on RCM basis, you required from the liability for registered person is different, unregistered person is different. In the case of registered person, he will be filing your GSTR1 and indicating the GSTR1 itself, liability is shifted to recipient, not me. There you have to verify in GSTR3B, some of the parameters to be verified is RCM liabilities. Then import of goods, we are having a bill of entry, and import of services, we are having a RCM payment challans. And input credit distributed by the IST, we are having a separate set of documents. So these are the ITC availment. Then you want to pay the tax. How to pay the tax? There are two methods available: payment of tax through cash ledger, or otherwise you can pay it your ITC, that is called your electronic credit ledger. In both the ledgers can be used. If you pay any amount using challan, it will go to the electronic cash ledger. If you receive any goods and intimate in the GSTR 3B, I avail the credit, then that will go to the electronic credit ledger. So please understand, these are the two ledgers available, maintained at the GSTN portal for the purpose of you. From that two ledger, you can use the amount towards your tax liability. There one restriction you have to understand, section 18, gross utilization. So IGST can be used for CGST and SGST and IGST. CGST can be used for IGST and CGST, and SGST can be used for the IGST payment and SGST payment. But CGST cannot be used for the SGST, and SGST credit cannot be used for the central tax. So this is the cross utilization of ITC. Then assessment returns. I said earlier, I assess all these things as per my earlier determination, and I discharged my liabilities, everything, the ledgers maintained in the portal. Now I have to intimate the department, yes sir, I use this. How you are going to say? So these are the returns. The GSTR 3B, GSTR 4 for specified person, GSTR 5, then we are having a 5, then 6, then 7, 8 and 11. So these are the sum. GSTR 1, it is outward supply, that is also available. So financial account and return. So your books of account is a basic document. Why audit want to verify a detail? Because your financial account is the mother document for your payment of tax. So definitely the mother document is a verifiable document by the department, either at the range level or at the adjudication level, at the audit level, or at, you can also say in the next level also, next by the anti-evasion. So your books of accounts, from your books of accounts, you are indicating outward supply in GSTR 1. After that, you are also getting your this thing. Then your outward supply, whatever the granular available in the books of account, you may intimate in the summary level at the GSTR 3B. And also you want to reconcile that omission these informations you are saying in the GSTR 9. And finally you are reconciling, yes, my book of accounts and all the returns are as declared in 9, also reconciled through 9C. So you will be very well aware now, understand where the area I have to verify. I will be starting from 9C, I will verify 9. For these, I will verify the department says which document is a vital to understand whether you are strictly or not. So definitely the business has issues, problems in handling these documents, but unfortunately the law requires the verification starts from the mother document. That is the reason. Then financial account, for availment we are saying books of accounts. As I said, the mother document is nothing but your purchase documents. That is the inward supply. Then that inward supply is also reflected in GSTR 2A or GSTR 2B as the case may be. From August 2000, that is we can say August 2020 onwards, we are having a GSTR 2B, other facilitation given by the government. Then based on that, your credit will be taken into GSTR 3B. From GSTR 3B, it goes to your electronic credit ledger, and that reconciliation is taking place with your GSTR 9. And final, the reconciliation is certified by your GSTR 9C. This is your financial account to ITC availment. So here also you understand the very basic documents are required for the compliance. Definitely, I am not going to verify for this. I do not know what is a exemption, export, everything. It is a verifiable fact by the thing. In the case of export, you have to prove if it is a LUT, then you are expected to provide BRC or your FIRC. In the case of other than LUT also, you have to provide the tax has been paid, ITC has been availed properly. In the case of services, you have to provide repatriation received, all these things. Then if it is a merchant exporter, means you are expected to show the name and address of the merchant exporter along with his, then you have to export within the 90 days. All these conditions for each and everything, it is a definitely very, very elaborate, but I remit here, I stop myself with reference to tax liability on account of the broad spectrum of requirements. Now, how the compliance verification by the tax authorities? We said there are two authorities, scrutiny and audit. Then we will go through each and everything. I am very sorry if my session is too long or I am slightly faster in these things. Kindly listen, because this definitely requires not only a 1 hour or 45 minutes. It requires definitely elaborate discussion for each and everything. I hope in the future we will also have some more related. These sessions can be taken as per the requirement of your what we can say requirement of the trade and industries also. Then legal provision, I said earlier also, here 60, 61, 62, 63, and audit 65, and other also inspection power. These are the three different agencies which is going to verify your tax compliance. You have to understand the range of it is asking, audit is asking, investigation is asking. Yes, all these people are asking a reply or your expectations one way or other way, depending upon the level required for the verification. So if it is a section 67, it is anti-evasion, which means they will search and seize the documents. In audit, they will intimate and verify your financial documents. In assessment, they will be cross-verify whether your details available in returns and reported is in the consistent with the one report to another report. That is a minor one. So compliance, I said, scrutiny by range and circle in the case of state government, audit and the special audit by the specialized agencies, and inspection by the enforcement or anti-evasion or DGCA. These are the four agencies. We are going to verify your self-assessment correct or not. In scrutiny, this is a rule, section 61. It provides the proper officer to verify. In case there is a satisfactory explanation, it can be closed. So here they verify the correctness of the return, inform him there is any discrepancy noticed in the cross verification of returns. You are filing 4 to 5 returns. GSTR 1, GSTR 3B, you are issuing invoices, you are issuing also GSTR 9, GSTR 9C. So all this is the information available. So based on the preliminary information available, a preliminary scrutiny is taken. So that's why they verify GSTR 1 versus GSTR 3B, GSTR 2A versus GSTR 3B, GSTR 7, that is your TDS verifies your cash ledger requirements. Say. Then also e-way bills require outward supply. E-way bill required for the inward supply. So here they will cross verify within the various returns or documents prescribed and call for the explanations. And after that explanation, there are two possibilities: either close this issue or you can act based on the veracity of the compliance you have noticed. Either you can suggest for the section 65 audit, or you can suggest for the 67 special audit, or you can suggest for the anti-evasion, or yourself you can proceed to collect the duty as per the section 73 and 74. Okay, sir, that's fine. Then we can say this is the scrutiny by this is written rules 99. It says how the scrutiny has to be done. The information has to be 10 under ASMT 10. Then reply has to be received under 11. Then the proceedings inform accordingly in ASMT 12. These are the how the scrutiny has to be taken by and large with reference to scrutiny. You will see some of the parameters. So which are the circulars relating to this? So there are given a circular circular number 3, which says who is the proper officer for the functioning of the scrutiny. So that is very much required for the central CBIC, and similar circulars have been issued by the your state board also. State also, they are also issuing some of the circulars. Okay, that also you can verify whichever is required for the purpose. You want to understand whether this proper officer is correct or not. Then circular number 2019 they issued non-furnishing of these things. That is how to take action against the non-filers or staff filers. Then circular number we are giving it 2018. There is a proper officer for the section 73 and 74. Sorry, it is stuck up somewhere. Then proper officer, we told deputy commissioner and assistant commissioners and superintendents are more of by and large are these proper officers for the various sections or various circulars issued by the department as per the provisions of GST. So scrutiny flowchart, we can say communication of discrepancies noticed in the TP, pay the tax and interest, then issue closed. No sir, not accepted, then you can go initiate department if you require audit, or you can initiate action under special audit, or intimate inspection, or also issue show cause notice. This is the function at the ground level, that is the on the face of your return. On the face of return, I find something correct or something not correct. I said there is a difference between GSTR and GSTR 3B. Then you said, yes sir, some of the things I omitted, I will pay that and close the issue. Yes, you can close. No sir, I will be giving this information so you can verify and you can come to the conclusion, sir. You will give that verification, but it requires again some more verification, in-depth verification required. Then the proper officer has to take action as deemed fit depending upon the requirement compliance level required by the officer. That is the lookout of the officers. The ASMT 10 to DRG 7, that is a flow chart. ASMT 10 notice, ASMT 11 your reply for the notice, ASMT 12 drop proceedings. And if you are not acceptable, then you are going to issue DRC 1A as the case may be, pre-consulted notice. Then if you accepted, it is a DRC 03 payment, then drop proceedings. If not, they are going to issue DRC 1 show cause notice under section 73-74, make payment, then drop proceedings. Otherwise, DRC 06 reply for the objections or the assessment done by the department, then you can issue with the DRC 07 order after due adherence of adjudication proceedings by issue of show cause notice, personal hearing, extra, then DRG 7 will be issued, which is an appealable order. Then CMT 10 notice, what are the parameters, how the replies comes. Discrepancies, what are the general discrepancies noticed during this, we can see. The CBIC has already issued a SOP for the scrutiny verification. There are 2 instructions which is given during 22nd March. Then latest by May 2023 they are issued because of the electronic environment scrutiny process has been CSC also. These are 2 SOPs available. You can by and large, if you go through and read these, then definitely you can say reduce your non-compliance, reduce your requirement for the audit or these things. By and large, you can reduce your scrutiny and you can land up with audit because it requires a detailed verification. So that is possible. So my request for the attendees, that is all participants, is kindly download these 2 informations available in the CBIC and also understand how the SOP is given, what are the factors verified. But I have given some factors. SOP, the proper officer scrutinize related particulars furnished in the registered person and information available, and also available data analysis done by DGARM, and they are having some of the information. Then GST and e-waybill portal. These portals will assist the officer how to pick up the details for the scrutiny. Then parameters we will see one by one. Scrutiny parameter, as far as possible, these are the information they say. Don't ask unnecessarily documents, ask everything only after the ISMT 10. Then identified will be the required to scrutinize all the returns pertaining to the particular financial in a single go. Take one, take tomorrow, that is not possible, take for the entire financial year. Then where explanation by these things, you can also close the issue ASMT 12. Please understand, just because our ASMT 10 and ASMT 12 is issued, you may not fall under the category of audit. It may possible, or it may also possible for the anti-evasion. So some people are having some wrong notion that ASMT 10 issued, we are going to clear. The issue you noticed in ASMT 10 cannot be again done by your audit to that level only, not the extra level. The local office will be verify only the very few parameters. But in the audit, if they want a detailed this thing, they can also land upon. And there are court cases also told if his assessment is done, you cannot go for the audit, but it should be on a different footing and different issues. So understand ASMT 10 as far as possible, you can reduce your initial scrutiny level. Then scrutiny, they say within 30 days to complete. If it is not possible, they have to issue so cost notice under section 73 or 74. Then further audit and investigation is also possible, I told, that is also envisaging how it can be conducted. So here timeline, ASMT 10, ASMT 11, 30 days, then ASMT 12, another 30 days. So within the very short period, your issue will be closed. So within a period of 2 months, you can expect that all your issue will be closed. But unfortunately, taxpayer has their own issues. There I have to give submission document. So definitely we are seeking additional time required for that. There will find it slightly difficulty. Timeline for action under 73, ASMT 10, no reply, action under 73, 74 within another 30 days. And there also they provide these things. For example, we told for the period 2017-18, the time limit for issuance of so-cost is already over. I am not coming to the picture for this scrutiny. Recently, there are some of the court cases is pending. Whether it is correct or not, I am not coming there. As far as the departmental instruction notification issued for 2017-18, the due date for so-cost is already over. That is a 39/2023, and order has to be issued very shortly on or before 31/12/2023 on all 73 cases, which means non-suppression cases. So time is running short for the department. Then 2018-19, it is on or before 31/3/2024, order has to be issued and so-cost notice has to be issued on or before this month 31/12. So this month definitely a very crucial month for the department as well as this being order department. So-cost notice from the so-cost notice for the second period of 2018-19, and we are going to complete our GSTR 3B and 3 GSTR 1, and we are also going to have the GSTR 9 and 9C. And for the period 2019-20, though we are having a 6 months period, from January onwards, there will be requirement for submission of documents because the so-cost notice has to be issued on or before 31/3/2024. Definitely time is running, so please understand. So these are the some parameters they are given. Verify GSTR 1 outward supply tax paid in GSTR 1 tax factor 3B. Then GSTR 1 filed but GSTR 3B not filed. RCM liability declared in GSTR 2A, verify with the RCM liability paid in GSTR 3B as indicated. There may be a, which means what is here expected is you have to select these persons in GSTR 2A, see whether he is liable to RCM or not. Then if it is liable, you have to pay them as per the liability declared or as per the time of supply indicated for the RCM. Then zero rated supply, whether you can verify whether the zero rated supply is actually export or it is supplied to SEZ, or if something is extra, then you have to call for the details. And exempted and non-GST supply. Definitely the department want to know whether the exemption claimed by you is correct or not, whether there is a misclassification is possible or you will be incorrectly handling the rate of taxes. So there they wanted to know whether the exemption is correct or not. TCS and TDS supplies. Yes, if you are supplied to the government, the amount 1% has to come from your this thing. If you are selling it through e-commerce operator, then there is a different scenario is required. And e-way bill, definitely e-way bill is required, outward supply and inward supply. There are also parameters is required based on your transport agreement, whether it is a FOR or it is a X-Works, determines who is liable to generate the e-way bill. That is very much required. There the department expects whether definitely on the face of it do not know. So for that it will be verify your financial documents, your transport agreements. What is your transport agreements? Then ITC avail, as everybody now by and large aware, 3B versus GSTR 2A to P. Then RCM liability GSTR 3B is less and it may be more. Then ITC avail on cancelled registration. So there are provisions. After the cancellation, you cannot issue any notice. You cannot issue any invoices because he became an unregistered person. Unfortunately, even after cancellation, he used the same GST number, go on issuing. But unfortunately, our dealer may not be aware because dealer A vendor evaluation done one, he is not doing it periodically. We do not know when it is a license is cancelled. So as I said earlier, GST is a self-policing. So you have to also evaluate your, particularly these vendors, every month before you are making payment, you are making the purchases. Then section 64 cases and ITC available. So the law says within 18 months you are liable to take credit, but you cannot take it a credit. Even there are legal issues are going on. But as per the 16.4, you are expected to get these ITC credit within the 1 year. Then ITC on account of imported goods, we want to check up whether it is properly coming or not, or reversal of ITC on common inputs, which is used for the business and non-business and the taxable and the exempted. And in the case of real estate sector, we can say it is a supplies which are attracting or which are the non-GST also affordable and exempted supply also possible, and the landowners portions we can say, and also your after completion you may not be need not pay any tax at all, it goes outside the purview, but still at the time of construction you may not be aware what is used for the unsold, there you will be taking the common credit, there you have to utilize. So these are the some of the parameters. I have given each and everything steps, but I think there is a time is very short to complete each and every scenario I want to explain. But however, for the benefit of readers, I have given each and everything, how the verification takes, which table is affected on account of this. I can discuss all these things, but today's session we do not want to take because so many other parameters also I will take it. But however, I will also inform how to check outward liability. Outward liability, invoice of supply plus debit notes and credit notes or amendments. Debit notes as per financial account should be equal. It should not be more. If you issue more in the GSTR1, less in your financial account, then there is more in your GST, there is books of account, less in GSTR account, means you are suppressing your value received. The same the case for the credit notes. You will be issuing the credit note which may be comes under these things, but in your this thing there will be lesser credit notes will be more credit, lesser credit note will be available. So we say if a credit note is less there is a liability. In the case of this thing debit notes, if it is a more, there is a tax liability. So these are some information you wanted to know. It is a financial transaction. RCM liability I told you have to verify whether the buyer. And here I told you have to say that is a e-way bill liability. E-way bill also we told 138 rule mandate generation of e-way bill before commencement of goods. So here also before commencement of there are umpteen numbers of requirement is there. There is outward supply, there is inward supply, there is supply for the job worker, there is supply for the repair and maintenance. So each and everything there is a compliance mechanism is required. So e-way bill is verified your financial account. Wherever you show job work, then there will be definitely reported loss whether you issued a e-way bill and DC. So here all these things are very much important. Each and everything may land up, exchequer may lose. You know very well there are so many things happen. There are scams are going for the fake invoices. So now the department want to make more legal provision to tighten this compliance. That's why they are having the e-way bill, they are having the fast track, they are having a real-time tracking of your movement of goods. So all these things are very much required. Then liability 3B ITC, there also you want to check what is the liability you have paid, what is the liability you have discharged. Then e-way bill I have seen, then liability, then GSTR filed, but GSTR 3B is not filed. There definitely it comes under the self-assessed tax not paid. So that it will become directly under section 75 where you are liable to pay. It will not, there is no need. You will be going to be your bank account going to be, this means recovery start from your bank account or some other means it is going to be taken care of. So you should be very much careful whether you are complying these provisions or not. Then ITC availed on cancel registration I told. Then 16.4 I told also just like that. Then import of goods I told you have to verify with the ICE gate whether it is properly coming. Then reversal I told use that is used for the common inputs for the business and non-business. You have to read section 17 and also read it with the rule 42 and 43. These three rules, that is sections, clearly say what is the provisions for the availment of your ITC. It should not be used for non-business. It should not be used for the exempted service. If it is a common, you have to appropriate. ITC has to be reversed based on monthly return. So you may not be knowing that it is a monthly return. Every month you have to show if you are these things based on the previous year, and subsequently you can reduce your liability wherever it is required. Then action by taxpayer, download first. comparison of tax liability, which is a very good document. Then table number 8A for the your all invoice details in a single go for the ITC, that is inward supply. GSTR to be, we are having a Excel also coming, JSON also coming. If you are a normal person, you can download it to be. Summary report of 3B GSTR1 that you can download from the GSTR annual return for this. Then reconcile the outward supply, inward supply with the principal record or your mother records. Then check for the GST with the 9 and 9C, because I found there are inconsistency in all these things. Don't rush that. GSTR 9 is a facilitation, that is auto population is nothing but a facilitation you have to modify. Unfortunately, what the department find is many times this is nothing but click away. So please don't do that, please verify. Check for the tax payable as per financial account and equal to tax paid as per the 3B. Then less or equal to further liability, then more than 3B liable, then you have to pay the differential taxes. Important thing to consider, understand the facts. If the notice is issued, please understand the facts. Chronologically list down the facts as per the legal requirements. Keep ready these documents to reply. Roughly list down the topics that may be useful for replying as per your understanding. Prepare a draft, check all the aspects are covered. Finally, it's a draft. If you want, you can include your legal provisions also. Submit the reply as per the timeline, either manually or electronically. So when SOCOST notice, the ASMT notice or DRG1 notice, it is not ultimate. Please understand, these things are not ultimate. It appears for the officer there may be a lacuna or loss of revenue, but it is you who are going to give the facts correctly so that the officer can come to the conclusion, yes, it is possible. So our learned sir also, chairman told, not sufficient time is given. Absolutely, this is happening, but unfortunately, we only asked for the extension of time, and the time now it is a very short time. So within another 6 months, the government has to complete the assessment up to 2020. After 2020, definitely we can say find a very much improvement in the compliance as of the verifications. So please consider these things with reference to scrutiny. And demand also I told it is 7374. If it is not properly assessed in ASMT 10, liability 2. Then DRG1 and DA and part 2 I told you have to reply. This is only a pre-consultative notice. You may not expect for each and everything. If it is required, it will send. Otherwise, it may not be. You can straight away DR1 is possible. So DRG1 notice, then DRG6 your reply, and DRG7 is your order, which is a appealable order. So these are the 3 documents. Periodically go to the website, find whether you are issued with a notice or not. You can go to that these things, user services, orders or additional notices or orders. There you can find these information. These documents are available, and apart from that, GSTN sends SMS as well as the email wherever required for the particular sending of these particular documents. Then DRG7, DRG8, this is the rectification is required. We can online filing. You just go, and I said this is a screen available. Click there, then you can give add reply. You can add reply up to 4 documents. You can each 5 MB you can upload along with the reply also. The reply, it may not be pasting, is not possible. So you have to attach your reply, a detailed reply along with the supporting documents. All these things are possible with around 20 MBs of the documents is sufficiently covered. Then this online, you will be having evidence for your ARN. So this is your online filing. ASMT 11 to DRG7 not accepted. DRG1A as our required pre-consultative. DRG1 SOCOST notice. DRG06 reply, and DRG07 is your order for the closing your ASMT circle. Other assessment I told, assessment of non-filers, assessment of unregistered person, summary assessment. Assessment of non-filers, everything we can say he do not want to come under the purview of GST. So in all these things, the treatment is entirely different. So there the assessment is different. It may be a land up you for your particularly anti-evasion mechanism, but non-filers, a report will be sent when there is a clear SOP is available where the department auto-generated reply will come. If you are not taking action on account of the auto-generated reply, then action will be initiated for the suspension or the cancellation of your registration, and there the assessment order will be issued based on the best of judgment. Then procedural, like this is nothing but this thing. The please note, the sections invoked only for non-filing of GSTR 3B, not for other returns. That is very much important for the non-filers. Then SOB for the non-filers, mail to the unraised, that is a non-filers. Then after due date, then there will be an intimation. Then after that, you will be taking action under the ASMT 10 or it is also ASMT 13. Then 78, 79 if necessary, or action under 29 for the cancellation. All these things are possible if you are non-filing your returns for a particular period or 6 month period. So unregistered person, it is directly, we can say it is if you are not unregistered, definitely it is an anti-evasion work only. So here summary assessment, this is also only with reference to those who are not properly assessed. Where there is no documents are available, summary assessment will be done. That also within the based on the principles of natural justice. Then audit. So it is a very detailed examination of book that we know. This is as good as your ASMT 10, but here what is the distinct difference is audit by authorities, special audit, then we are having the annual audit by CAs, that is not now connected. Earlier it was a 9C, now it is not 9C. Then it is a CAG audit, it is an external agency. You can call as a central agency, they will be coming and verify whether your compliance is correct or not. They are also doing the systematic audit with reference to procedural aspect. Not only they are a thematic audit they are conducting, and they are also specific audit in the tax persons also possible. But special audit is done by your CA as per the requirement of the department. Audit by authorities, it is a regular phenomena. So statutory provision I told, sections 65 and 101 for the rules for the procedural aspects. Audit by authorities, registered persons should provide all the auditors necessary facility. Such information as is required by the authorities, assist him to ready timely completion. Result of audit will be intimated within 30 days from ASMT D2 and further action. Proper officer may take action under section 73 or 74 if deducts tax not paid, short paid, erroneously refunded, or input tax wrongly availed or unutilized, or other non-compliances if any. You are not filing return, they will be taking it as. You are not following e-way bill procedures, they will be considering. You are not following the procedure for the e-invoices, they will be taking into account. So all these things are possible for the special audit. It is required by the department, then it is with the approval of the commissioner. The special audit will be done by the specific requirement of the department. Then special audit I told, then that will be done by CAG audit. It is nothing but your CAG audit comes done either the thematic audit based on the selective topics, refund or assessment. This they will be selecting the particular topic and they will be conducting a sample audit and they will submit, it will be placed before the parliament and the parliament will discuss and action taken report will be taken. At times they may also visit the individual assessee if required. Now in the CHT general I found they are not doing, but earlier they are visiting the factories. Now it is not so. Now it is only they are doing a systematic or thematic audit, which is performance audit they are conducting. That is CAG audit. So what is audit? It is a clearly defined in section. Examination of records, returns and other documents maintained or furnished by the registered person under this act. You know very well, as per these provisions, you have to maintain umpteen numbers of records for the receipt, sales, then purchase, then utilization. Each and everything there is a specific sections are available. What are the documents to be kept? How many years it has to be kept? Then correctness of the tenor will be verified. Value, tax paid, refund claimed. All these things verified by the audit. Then to assess the compliance with reference to this act. So this is the functions of the audit. Principles. This is the important principle is to see the level of compliance by the auditee in the light of the provisions. Audit is consistent with the notification, circulars, orders issued from time to time. Definitely, audit cannot go beyond the scope of the notification, beyond the scope of circular. You can cite whenever they think that these are already settled issues, this notification issues. Then audit has to approve, then they can close. So their role is limited to verify whether the compliance or non-compliance is with reference to these documents, categorically told by the principles of audit. The objective, intend to evaluate the creditability of the self-assessed tax. So if it is your creditability is fine, there may not be much audit para. Definitely now we are getting audit para for the year 2017-18 initial period, 2018-19 and 19-20. After 19-20, in fact, after COVID, there was a massive change in the compliance and also the legal provision has been modified. And GST also taken note of the complexity involved. They told you facilitate the taxpayer by simplifying certain registers, that is returns, or provide the data which is already available with the GSTN by auto-populated manners. That's why we are having a system-generated TB. We are having a system-generated GSTR. 2B and 3B is now possible. Similarly, GSTR1, it takes, you are giving the system-generated 3B based on your inward supply declared in the GSTR1. So here, measures of the compliance level, deductions of the non-compliance. There may be many possibilities subject to this thing. You can say there are some notification involved, conditional notification. There they want to verify whether the condition is fulfilled or not. So there they want to, so whether the revenue is, there is no leakage of revenue on account of the non-compliance. This is the goal and aim of the audit. Then departmental audit is detailed examination. Then authorized by an auditor, he will be do the direct auditor to tax person, will be selected. Then risk scores and risk profiling is done by the department. Some selection criteria, total tax, total through output, refund claims, export and zero rating supply, history of delinquency, then unusual deviation from norms and standards, and rule 41, 42. All these things are the parameters which is used for selection criteria for the audit. So here date of commencement, then later it can be commence audit once a letter sent, records and others provided within, that is the date, it is a commencement of audit. Actual institution is at the place of business or it may be at the office. There also it is possible depending upon the requirement. Scope of audit, that is the steps involved in audit. Audit selection is the first, then allotment to the TP to the second step, then the group will be allotted. This you please done the audit. Then expertise officers, they will be taking that for the audit. Then issuance of notice. So they, after this selection everything, the notice will be communicated well in advance to the particular party or taxpayer in ADT 01, fix the date and time. And they are also asked you to informally come and discuss this date and you negotiate with them for the suitable date for you. Then the department can commence the audit and you can also submit the documents. Then the pre-desk review will be done based on the initial documents provided, otherwise documents available with the department. This by and large EA 2000 methodology being adopted. Then preparation of audit and approval plan. So all central government audit, we can say by and large, after preparation of the preliminary verification, it will be submitted to the joint commissioner or the officer concerned for the approval. Sir, we verified this particular area. We wanted to go for the in-depth study on account of this particular parameters. So that will be verified, you call your audit plan. Then audit plan will be scrutinized by the higher level of authorities. Yes, this is correct. Otherwise also, if it is some of the scrutiny level also, if there is a no requirement, that plan will be drawn. So there you will be having these things here. Definitely your audit, the central government audit we can say, or you can also state level. There is a requirement for the approval by the audit plan. So that will also give scope for the reducing the litigations. Then commencement of the audit, they will come. Then examination, they will verify deeply examination each and every document provided. Then communication of the discrepancies in the ADT, they will be done. Then draft audit report is prepared. Then after that, final audit report will be sent. And the consequences either closure or issuance of the show-cause notice depending upon the recovery proceeding. Areas covered, broadly the area covered are tax liability and forward charge, tax liability and reverse charge, availment and utilization of the input tax credit. The forward charge, GSTR versus GSTR 3B books, late filing, wrong classification, GST of advances and services, reconciliation of e-waybill and sales invoices, stock transfers, act of tolerance of services, interest on start payment. These are some areas. And in the case of input tax credit, Tran 1, Tran 2, now it is by and large over, but still there was a window was open very recently, so there will be a scope for verification. Then GSTR 8, GSTR 3B or GSTR 2B versus 3B. Then blocked credit under section 17.5, common ITC availed or on account of the exempted and non-exempted, taxable and non-taxable or business non. Then 180 days reversal. If you are not giving a trade payable, then there is a specific provision there that will be done or not. It cannot be done sitting in the office. They have to visit and collect this document. And credit notes reflected in GSTR 2A. Then reversal in the case of insurance claim, interest for the ITC reversal. These are the broad categories. Reverse charge, purchase from the unregistered dealer, earlier period, goods and transport agency. By and large, we are having enough para. Legal services, security services from 1/1/2019, rent a cab from last year, Then from the directors, now they are having a sufficient clarification has been given, whether it is a 194J or 192C, whether it is a salary or it is a commission paid to the director. Then services received from the government and umpteen numbers of issues have been noticed. Then import of goods, we may not verify at the time of ice gate, now it can be possible. Then royalty to foreign companies on account of the outgo of the foreign currencies. These are something. Audit flowchart, notice for the conducting audit, then commencement of the audit, field verification, then audit report, then acceptance by the TP, then issuance of show cause notice and adjudication. This is the audit cycle. Recap. So we understand self-assessment is the backbone of your GST assessment. There you are going to determine your tax liability based on the parameters we already told, 7 parameters: supply, value, classification, time of supply, place of supply. Then once you determine, you are intimating the department by filing a return for the self-assessment done by you. Once you done that, the department start action, either the scrutiny the returns or other assessment done, or otherwise it takes for the audit. So these are the main functions of the assessment and audit. Within the given time, I think I have completed, or I can say enabled you to study more about all the self-assessment and actions by the department. Sorry, I couldn't give you the very many legal provisions. So this is an educational initiatives only, which means enabling you to or asking you to go further in this particular subject. These are the requirements by a taxpayer. That is the indication for this session. Thank you very much. If any questions, we can take it, sir. Give me 2 minutes time. I'll take water and I'll come. Sorry. Thank you very much, sir. Over to Mr. Vivek, sir, for further.
Thank you, Sri Venkateswaranji, for such an exhaustive and lucid presentation. And I am sure all of us have been benefited by it. Now I would invite participants for questions, if any. Please ensure that the questions asked should be relevant to our today's topic. And further, the questions can be asked using the chat box. In the chat box, there is one question, Venkateswaranji.
Yes, sir. I'll just 1 second. Only 1 second. Chat box. Right. I couldn't see chat box, sir. 1 second.
The definition of assessment given in section 211 includes the word reassessment. Under which of CGST, SGST, reassessment is provided.
Sir, reassessment is, we are saying only 73 is also reassessment. You have done the assessment, we are doing it a reassessment. And 9, see, we have to say this 9 rule number, that is a GSTR 9. There is nothing but reassessment of the earlier year, whatever you have done during GSTR 1, GSTR 3B. So that's why you call that's a reassessment also. That means what is left over, you are again indicating in the GSTR 9 and GSTR 9C.
Other participant is asking for the slide that we will share. Presentation. So I think there is no further questions.
Okay, sir. Thank you very much, sir. Sorry.
So
how soon refund on the export can be received? Sir, we will be already conducting a session for refund, but today's session is for assessment. And unfortunately, the time does not permit you for me to discuss on this refund. RCM, we have already we have done enough number of classes. I found that the RCM class was very much appreciated by and large by very many people. Again, they are asking the question of RCM payable on account of sales commission given to agent out of India for export. There I have to say it is, you have to see that is, since it is relating to assessment, this is covered under section 13, whether it is an intermediary or not. If it is an intermediary services, the tax liability is within India. If the intermediary service is abroad, then it is called your other than export of services. So kindly read section 13 of IGST Act with reference to intermediary services. This upon, the department also has issued a very clear clarification or circular regarding how to treat this intermediary service and how to treat the subsidiary company, the service provided to the local companies. All these things are already available. So you have to read it with section 13 and circular issued by the GST. How to interpret wording ISD credit distributed in same month in rule. See, this means here now the restriction has been started to 2B, which means ISD also has to distribute whatever is reflected in the ISD, then he has to distribute to the lawyer format. There is other service, that is your distributors. So we cannot say earlier there was a provision, the ISD can also go for the GST or 2A subsequently filed. Now all these restrictions are within the parameter of the 2B. Even the refund also now prior to 1,001 to the 1 on 2022, it is based on 2A. Now after 1 on 2022, only if it is available in 2B only, it is possible to take credit. To that extent, now refund recently circular also issued with reference to refund. Whatever this thing, whatever is filed during the month and it is uploaded in referred to be yours eligible for the refund. Otherwise, it is not possible. The earlier circular issued by the department says even you can claim a refund for the invoices which are subsequently filed in GST or 2A, but now the scenario is modified from 1/1/2022 and recent circular has been issued. Appeal filed before.
Whether DIN is mandatory for the notice issued by state authority.
Sir, appeal filed before the JCI is dismissed. Now adjudicating authorities insisting payment of demand amount. We are going to appeal. Then since the tribunal is not, yes sir, this is only a department has to definitely take action. Now they are issuing this thing. You can say that appeal is the appellate forum is not constituted. Please wait. So that is why the department is reminding you your liability. But does not mean that you are immediately paying that. You are having your appellate forum is possible. If you are not going for the appellate tribunal, you can rightly go to the question of law, to the High Court. Many people have went also. Now that also now since appellate is going to be formed, this problem will not arise shortly. When writ is to be preferred, when appeal. So this we have to say, writ is when there is a question of law is required, you can go to the writ. When there is no question of law is required, it is only procedural aspect, everything, you have to file appeal. You have to decide whether it is a question of law is involved in the interpretation and that is required, then you can go for the writ appeal. That is the assessment requirement. So I think there is a last question, Mr. Kanwal has given that whether when writ is, that you have to understand legally, only when there is a question of law, then it will be the High Courts will be entertained your writ application. If there is no question of law, they will be ask you to go for the regular appellate forums.
Whether DIN is mandatory, DIN for mandatory. For
Sir, as far as the now almost all these things are DI is made mandatory by the CBIC. Without CBIC, that is GSTN, none of the documents are issued to this thing. DRC1, there is a requirement earlier. Now, if it is online, there is a AR number is auto-generated, then there may not be requirement of the DIN numbers. If from, you can say May 2023 onwards, all your, that is your demand IASMT and DRC1, it comes directly under the GSTN portal. There, this ARN number and DIN number is nothing but a referral number that is made available. If it is other than this, you can expect for the DIN number.
Last question in GST are 2A, 2B.
2A, HSN details are not available. Sir, you know very well, for you it is 2A, 2B. For the back-end officer, GSTR one consisting of, there is a provision, table number 12. If you say, check up your table number 12 in the GSTR one, it asks to capture the HSN wise details for the outward supply. So the officer, I already told assessment is based on that. The return filed by the officers and the information provided by the DGARM and other. So there they are getting the information about the HSN code of the particular assessee. Then they are asking this particular assessee is supplying this goods, whether you are entitled, taken or not. So this may not be possible for the 2AB, it is not reflecting. But as a taxpayer, you can also request for a GST and to provide the details for your better benefit also. Because this information is already captured at the granular level in through our up to 5 crores for all e-invoices. B2C we are not having, B2B we are having. For now, the department definitely has this information. 1 minute, sir. I will take one more question is coming, somebody. Can appearance in 2A supply details sufficient that supplier has to deposit? See, all these things are legal provision under section 16. The legal provision says just because of the reflected in these things, you are not entitled. There is one more provision. The person has to file a GST. That is, earlier it is called a valid return. Now it's told 3B also has to be filed. So there also the broad concept is without receipt of money, the government cannot give any credit. So that is also debated in very many forums. That's why it is inbuilt in section 16. You have the 16.1, 16.2, 16C, there is that. It says clearly earlier a valid return has to be filed. There we had earlier provisional credit, and after that we are having a final credit. Now it is a simplified. So this cross empowerment is already given in the Act. So it depends upon which Act, that is authority, finds the evasion or this thing, they will be taking care of. They want to protect that revenue. There is a possibility. Only thing they told, very same issue cannot be handled by the by one department by the other department. There are court cases also given, but law empowers for the cross empowerment has been given. So investigation can be done by the both central and state, but on a different issues, not for the same issue. That your administration is for the day-to-day efforts and for the legal requirement of compliances, both the authorities have been given the powers. Assessment can be only done by your local authorities, not by the other authorities. But in the case of scrutiny, it can be, that is in the case of inspection, it can be done both the authorities. Audit, it is only restricted by your administrative authorities only. Scrutiny and audit by the administrative authorities, inspection, anti-evasion by the both the authorities. The credit and debit notes, already there is a section called 16.4. The credit note and debit note, they earlier linked with your base document. Down as they said, it is not a base document. You can issue for the credit note even for the base document, which is previous to 1 or 2 years also. But taking the 16.4, that credit note should be within 8 months. But the base document can be beyond that year. That is possible. There is a law has been amended in section 16.4. Thank you very much, sir.
So I think it was indeed a fantastic experience for all of us. In such a short span, we have been enriched with all the information on assessment and audit under GST, and credit goes to all the presenters as well as participants, without whom this webinar would not have been such a success. To conclude, a sincere thanks to Sri Amish Kumar Gupta sir for your time and inputs. Sir, your encouraging words are always a motivator for all of us. We are really enlightened with your knowledge and presence. On behalf of DGTS, DJDU and KJDU, I take this opportunity to propose vote of thanks to those who have directly or indirectly contributed to this webinar on assessment and audit under GST organized by our department. Also, a thanks to Sri Sachin Menon for sharing his valuable experience, and a special thanks to Sri Venkateswaran for his presentation and speech that made us understand the topic so lucidly and in such an easy manner that we all can appreciate. In the end, I would like to thank all the participants for their support and time in making this webinar a success. Thank you so much.
Thank you, sir.